Good morning. Welcome to Market Day Report. I'm Tony St. James. What's the day after? The day after a WASDE report, and we're seeing some reaction already. What about the overnight session? How did traders react to that report? Well, let's look. Corn market in overnight trade, penny higher on the front month, and March most active at 450 and a quarter was a penny and a quarter higher. Over to soybeans in the overnight session, lower, down 3.5 on the January at 991 and a quarter, with the March contract at 997 and 3/4, down 2.5. I want to bring soy meal and soy oil into the conversation because Brian Hoops will join us in a moment. January meal at 291, down 1 in the overnight session. And soy oil lower as well, despite some positive news from that report. Now to the wheat market, we'll start with Chicago, July at 580 and 3/4, up 3 3/4. Also overnight, Kansas City at 582.5, penny and 3/4 higher. And Minneapolis wheat, March 608 and 3/4, up 2 1/4. And in New York, cotton futures in the overnight session down 23 more points, 69 1/4. Let's bring in Brian Hoops. Brian's president, Midwest Market Solutions. Let's start with corn first. By the way, no overnight sales reported, flash sales, so we can take that off the table. But going back to that WASDE report, I did see a little optimism in the corn numbers.
Good morning, Tony. Yeah, you're absolutely right. No export sales this morning, nothing this entire week, and I think it's been 4 days now without any type of a export sale announcement. So maybe a little bit concerning to the trade. But the numbers from the USDA yesterday were a bullish surprise, and it's good to see bullishness in their surprises instead of some sort of a bearish surprise. The USDA, if you remember back in the November supply and demand report, did not make any changes to the corn balance sheets, which was a little bit of a surprise. They could have been fully justified in increasing exports, and usually they're very conservative. So when they didn't make any changes, it was a little shocking, but they waited until this report to make some changes, and then they made a big change. They increased exports by 150 million bushels. So they could have easily stair-stepped it, 75 last month, 75 this month, but instead they chose to do it all this month. 150 million of increased exports, 50 million of increased ethanol usage. That's a pretty big jump, and it really cut our ending stocks down 200 million less than last month and well below trade estimates. So when you look at that corn number and you wonder, where are we going to go from here? Well, most likely scenario is if we do have this big crop out of South America, and they didn't make many changes to South American production yesterday, only increased Argentine soybeans from 51 to 52 million tons. If that crop does happen, it's going to pressure old crop soybean values, drag new crop down, and what the market will want to do is try and buy some corn acres in 2025 to replenish those ending stocks. They're not tight at 1.738 billion bushels, but certainly could be larger, and that's what the job of the market will be in 2025. So we're going to jump planted corn acres this year from the 90 million range, maybe 94 to 95 or even more next spring. There's only been 4 times in history we've planted 94 million acres or more in the United States, and we're going to, I think, exceed that in 2025 and maybe even challenge the 97.2 million that was planted back in 2012.
Yeah, good points there. Let's take a break. We'll come back and start talking livestock futures this morning in front of the open. By the way, cash cattle selling in the South. We'll have more. Market Day Report continues in a moment. All right, welcome back to Market Day Report. We'll get back with Brian Hoops in just a moment. We've been talking cash cattle for, well, the last 2 days, right? Monday and Tuesday. Will we see cash cattle develop equal to where we were last week, which was higher? Week over week? Will it be lower? Will it be steady? What will happen? Well, guess what? We sold out yesterday in the South. Everything that was available sold at 191. So now the attention will turn to the North, and we'll see what happens in the next couple of days. All right, let's see how the market concluded the session on Tuesday. Again, we don't trade livestock futures overnight. December live cattle 189.85 up 205. Most active February at 189.02 was $2 higher. Over to the feeders, and feeders $1.52 higher on the January, 257.32. The deferreds all with impressive gains. And then the hog market, December up a couple of pennies at 82.92. The deferreds, though, were lower, and that June contract did settle above $100, but did dip below that during the session. So a few things to watch as we start trading today. Brian Hoops, Midwest Market Solutions, what do you pull from all of this?
Yeah, well, the cash cattle trade you mentioned, if we have any cleanup, it's going to be at probably higher money. There's still some asking prices out there in the 194 range, which I don't think they'll get this week, but 191 certainly steady to a full dollar higher than what we saw a week ago. So some good cash markets there. The futures had a great rally and probably will continue to try and find some solid footing with that 191 trade. December's still $1.50 discount to that, and we'll continue to narrow that spread in my feeling. We're also discount to the feeder cattle index. So those front month feeders still need to come up and catch up to that index. It was down a little bit yesterday. I haven't seen this morning's index yet, but they will narrow that spread as we get closer into December and into January. So that's kind of what you want to watch, is how we are trading in relation to the cash markets. The hog market had a big down day in almost all the contracts yesterday. And again, watching what the technicals happen in that hog market, we could and probably will see some follow through selling, at least to start off the morning hours. And if we take out yesterday's lows, likely a continuation. But if we can hold those lows, maybe we'll get some short covering and push us back to the plus side today. Hog weights that came out earlier this morning actually dipped below year-ago levels for the first time in recent memory. So they were unchanged with a week ago. They're still heavy, but at least they are below year-ago levels now.
Okay, Brian, from an outsider peeking through the window on this WASDE report, pork production forecast reduced on lighter expected dressed weights in the first half of the year. Throw in the fact that we get a hogs and pigs report on the 23rd and then a light day of trade on the 24th. Is this something we need to keep in mind?
Yeah, we do have that quarterly report, and a lot of times this report has not been all that important. In fact, I remember when we used to have monthly hog and pig reports, and they discontinued them and went to the quarterly. So we'll keep an eye on it as we get closer. We'll start seeing some of those estimates. But the futures market, as you mentioned, June trading over $100, up in the 102 range. As we get into the spring, into the summer, I think there's going to be some hedging opportunities out there for some good profit levels in those summer month futures.
All right, Brian, great to see you. We'll see you back here tomorrow as well. Brian Hoops with Midwest Market Solutions.